Hello, how are you all today? Thank you for being here. My name's Jennifer Reed, and this is my colleague Amber Warren, and we are from Sound Credit Union. We are located right down the street, about a football field away. But we are here to talk about understanding your credit report and your score. So at Sound, one of the things that's really important to us is that we're coming out into the community and working with students like yourself to talk about financial education and tools and resources that are there to benefit you. So how many of you have actually looked at your credit report or score before? Excellent. You're way ahead of like half of America, believe it or not. So today, hopefully, as we go through, we want to make this an interactive conversation. That's how we can all learn from each other. There's situations that some of you have been through that maybe you can share with others. So as we're going through, if you have questions or comments, don't hesitate to ask, because that's how we can all get better at managing our finances and sharing solutions with others. So let's go ahead and get started. So things we're going to talk about today. We're going to talk about why credit is important, what is on your credit report, how to obtain it, how your credit score is calculated, how to build credit, common myths surrounding credit, and then tips on using your credit wisely. Because sometimes when you go get a credit card or you're applying for loans, people don't necessarily explain the importance of how to manage those and like the numbers behind it. So we want you to all know how to better prepare yourself and your family into your future. So with that being said, let's go ahead and get started. Okay, so why is credit important? How many of you, I think we just talked to one person here earlier. One of the reasons it's important is trying to, get an apartment, looking for a job. People, more than 40% of employers are reviewing people's credit reports before they hire them, which is pretty surprising sometimes. Yes, you were going to say something. Correct. Yes, it's gonna, if you're trying to buy something and you don't necessarily have the cash, it's being able to get that loan. So building your credit early. How many of you have a credit card? Good. We'll talk about how to use it. I have, when we go out and talk, a lot of times I talk about my 16-year-old. I'm trying to build his credit for him now so that when he's your age and starting college, he can look at getting an apartment or building that credit on his own and not have to worry about it. So those are the things that are part of the reason why credit is important. So landing your job. So like I just said, more than 40% of employers are looking at their applicants' credit report. We sit right by our recruiters at work and we hear them calling and checking on people's credit reports, making sure that it's been authorized, because you do have to authorize it before they do that, but they're going to look at that. And then it's not only just that, it's renting or buying your place. So many of you may have tried to apply for an apartment, or bought a house, an auto loan, and anything like that. Your credit's going to come into play. If you don't have a credit score, it's going to make it a little bit more complicated on your ability to access renting or buying. When you come in to get an auto loan, if you're working with whether it's a bank or a credit union, we're looking at your history. It's helping us to better understand how you've been responsible with the funding that you've been given. So explaining that to people and making sure that you understand that it's almost like showing a characteristic of who you are. If you're making your payments on time, are you being responsible with the money that you've been lent? How that's working for you, and are you overextended? I think we might hear a lot about that right now in the news about people, especially in this country, who might have overextended themselves with credit, and they're kind of running into some problems on having to be able to pay their bills. So making sure you understand how much credit you have and how much what you're using. So here's an example of why a credit score is important. So we have two people here. We have Diego, who has a credit score of 660, and Angela with one is 750. They're both trying to buy a home that's valued at $325,000 for a 30-year mortgage. So if we look at the interest rates, they're not too bad off on interest, 7.63 for Angela and 8.25 for Diego. They're both putting down the same monthly or down payment, but look at the difference in the monthly payment. It's about $100 difference. But this is the big one. When we're talking about interest rates over 30 years, that difference of 675,000 versus 716,000 ends up being $41,000 difference just by having a credit score that's that different. That's pretty staggering. I've got a lot of things I could use $41,000 for over 30 years that would benefit me better than paying interest on a loan. Does that make sense? So with that, we'll go into what's on your credit report.
There are actually a number of things that can show up on your credit report. I know that they've got like, there's a new thing that you can do where you can put on your utilities on your credit report to show that you're making payments on time, doing something like that. But there's actually 3 major credit bureaus that these things are all reported to. So if you have an auto loan, you have a credit card, you have a home loan, you have student loans, those things are things that we're seeing that are showing up on credit reports. So there's actually, because there's 3 different ones, we use one called Experian that just because they're all financial institution specific. However, if you're looking for something that's much bigger, right, you're looking for a home, the lender may pull from all 3 credit bureaus. And so they do that because across the 3 bureaus, sometimes your credit score can fluctuate and go up or down. And as a consumer, you want to make sure that you have the best score in order to get the best rate, just as we saw with the 2 individuals before. And so same thing goes when you're purchasing a vehicle. You may end up going to the dealership and they're going to do the same thing for you. They're going to pull all 3 reports to try to get you into the lowest interest rate to get you into that vehicle. Sometimes it allows you to spend a little bit more on the vehicle as well. So when you're looking at what's on your credit report, definitely it's something that we need to obtain by obtaining all of your personal information. So your social security card, your birth or number, excuse me, your birthday, maybe your past addresses. You need to sometimes supply history, right? So if you've recently moved, oftentimes you need 2 years of history. So if you move every 6 months or you move every year, make sure that you come prepared with that. That may be something that's you're needed. And then your employer as well. And then also your income. So if your employment is something that may be new, that's something that the lender would look at as well is, do you have some kind of commitment or hire letter that says, hey, this person's going to work 40 hours a week at $22 an hour. So then we can take that into account that you just signed essentially a contract. You're going to go and work for this company and that's what you'll be making. So we can account for that wage. Because then we get into something else called debt to income. So we have credit accounts that also show up on your credit report. So if you have like credit cards or personal loans or auto loans, all these different types of debts, what we're looking at is we're looking at that you're making your payments on time. So it shows an extended history of if you're making your payments on time. And then how much is owed monthly and overall. And then there's other household bills, right? I touched on that just a few moments ago. So you can add in with like correct me if I'm wrong, it's like Experian Boost.
Yep.
So you can add in the utilities or the different things that you're paying that don't generally show up on a credit report just to help increase that score. And then that's it. When you have these things that are reporting on your credit off, they're going to show up for a total of 7 years from the time that they're paid off. And then, any collection accounts. That's another thing that's looked at as well. So we call them derogatory. So if you have anything that's marked as a derogatory or collection account, then those things will also show up, and then they show you kind of a date range, or you can kind of look back and see when that happened. So if you've had that happen, that doesn't necessarily mean that you're going to be disqualified or not qualified to do something. You may just have to explain what happened during that time. Well, I had a loss in the job, or something happened and I totally forgot to pay that bill. Life was chaotic. There's typically a reason behind it, right? So you may be asked to supply that.
And they can write that in, right? They can go to the collections, go to the bureau that's reporting that, and they can put that, there's like 120 words that you get to add to your credit report to explain yourself to. whether it's identity theft or with something like that?
Oh, yes, you can add a consumer statement to your credit report. You absolutely can. So you can do that with all three bureaus where you can add a consumer statement, whether that be, oftentimes the one that I see is if you are extending credit to me, please call me on my cell phone. And then I would list my cell phone before extending credit to me. As somebody that helps people obtain credit, it can be very awkward because I have to turn around and call you from the phone and then listen to it ring in your pocket and have you pick it up and answer it. But it's just an added protection for you. So it's kind of like an explanation. This is me. If you're doing this and you're extending this, make sure that happens. And then also another thing that can show up on your credit report is any kind of like public record. So that's typically like any kind of bankruptcy or tax lien or judgment, and they stay on your credit for up to 10 years. You have a question? How do collection accounts affect you? So that's a great question. So depending on the scenario, because everybody can have a different scenario, if you have collection accounts, your best plan of action is to take care of them, get rid of them as fast as you can. If you listen to any kind of advisor that has like financial advice that may be largely famous or not, even somebody that you may find on social media, they're going to talk to you about settlement of debts as well. As long as that debt is showed that it's paid and closed, then you're on the road to recovery, because they can affect you and they can make your credit score drop significantly, right? But the best plan of action is to take care of it and kind of snowball it out of there, and then move forward. That's all you can do, right? Pick yourself up, dust your knees off, and keep going.
One thing I would say that, like, if before anyone gets to collections, or if you have a lender who's calling you to talk to you about outstanding bills, sometimes if you run into a situation in life, because life happens, right? Pick up the phone and call your lender. Don't be afraid. Be your own advocate. You have a voice. Pick up the phone and call your lender and tell them your story. Anymore, lenders are going to be more understanding and willing to work with you and find different solutions. Whether they might tell you about a different program, maybe it's consolidating debt and putting it all into one, or connecting you with a financial coach on their team that might be able to assist you. It's really important to know that if you're picking up the phone and advocating for yourself, it's going to benefit you. And especially if you do it before you go to collections, they'll avoid collections and maybe they'll put you into a payment plan. Make sense? Yes. Do you know how that works?
Yeah. So when you have a debt and it goes into a derogatory or a collection status, oftentimes it is purchased by a third party, a debt collection agency, right? Some people have them in-house and some people outsource them. When that debt collection agency buys it, now it's that debt collection agency's sole purpose to contact you. You want to try to avoid it to get there. You're better off speaking to your lender about some kind of plan of action, because they do offer different programs and they do have different financial coaches that can help you through that path, or they may offer something that you didn't even know was a thing. There's like skip pay programs and there's all kinds of different things that maybe they can help you. And then it kind of puts you give your person to it, right? So you're not just a debt, you're a person. We know that you're all people and we want to help you, right? So it's important to make sure that you keep that line of communication open, because if it is sold to a debt collection agency, that's their sole purpose, is to collect from you. And they will call you and they will email you and they will do everything in their power to try to get a hold of you. Any other questions?
These are great questions. Keep them coming.
Absolutely.
And then inquiries.
Yeah. So there's two different types of inquiries that you can have happen on your credit report. There's a soft inquiry. So oftentimes that's used for like opening a bank account. We'll do a soft inquiry. Maybe starting in a new job, they may do a soft inquiry. And then there's a hard inquiry. A hard inquiry is when you are saying, yes, absolutely, I would like to borrow money to purchase X, Y, or Z, or I'd like to borrow money because then I can have a credit card or whatever it may be. Then we're looking at doing a hard inquiry. So then we're pulling your credit as a full, and that's something that will show and have a history on your credit report. So that's something that goes on your credit report for 2 years. And so if you're doing multiple hard inquiries over the course of those 2 years, they'll continue to show up and they can affect you. So you want to make sure that you're doing your shopping around. I'm going to do a credit card. Where do I want to do a credit card with? Okay, I've got 4 different people that I've got in mind to do a credit card with, or 4 different businesses, excuse me. Then I'm going to move forward with this one because they're offering the best program. I don't have to pay annually for my credit card. I get some kind of perk or reward for my credit card. So then you kind of dwindle it down, and then maybe you only do a couple of inquiries or just the one, right, to move forward. So that's the difference between a soft inquiry and a hard inquiry. The soft inquiry, you're not going to notice. It's something that's usually to obtain a credit or an employment or a bank account. And then the hard inquiries, absolutely, if you're going to borrow some money.
And right now with the holidays coming is when you're gonna go into a store and you're gonna go to purchase something. They're gonna say, hey, do you want to get $50 off today because you spent over $150? You can get the $50 off if you open a credit card. Every time you sign up or apply for a credit card, it is going to pull against your credit. So it's going to lower that score. And if you have multiple businesses that you're doing a credit card for at the same time or within that 2-year span, like Amber's talking about, it's when you're really going to see it impact you. So before signing up for those credit cards, not only is it going to ding your credit, remember that those stores typically have higher interest rates too, which is going to impact, the amount of money that you're spending, things like that. So really think twice before signing up for those things, even though it's tempting to say, yes, I want the $50 off.
Absolutely.
Oh, yes.
Positive credit.
Mm-hmm.
You're making your payments on time. It's given you great history. You have some diversity on your credit, right? You've got a credit card, maybe you have a student loan, you have an auto loan, and then a home loan, right? So now you've created some different types of products that you're borrowing. And so these are all good things to see on your 3 major credit bureaus, right?
And one thing that we were talking about earlier today that a lot of people don't understand, and we may talk about it as we go through, but I think right now it's just as good a time to talk about it, is like, how many of you have opened a credit card and then closed it? Okay. When you close those credit cards, any good history that you have with your credit report goes away. So that positive goes away. So I will take myself, for example, where I've had a credit card and then my husband and I had a discussion because you should talk as a family about where you have your credit cards and how you're using them. And we decided that we need to cut this credit card up and don't use it. So before closing the account, I would say maybe consider putting the card where you can't access it unless you need it. Because you don't want to lose that credit history. So if you were in debt and maybe you were behind in payments and then all of a sudden you paid it all off, and it all shows that positive, all that hard work that you did to accomplish paying off that credit card. If you close it, it's now gone. So anybody, next time you go to open a credit card, they're not going to see it. So just think about that before closing a credit card. It can benefit you to still have it if it's showing that positive history. Yes. Mm. Yeah. Yep. Same thing. Yes. Mm-hmm. It's up to you and how you want to do that. I would say if you're going to pay it off within the month and you're not going to accrue interest, it's showing your responsibility with making sure you're making those payments on time. And that's what you really want to do. Yes.
And I have a little breaking it up kind of show would it be better to pay it off or break it up and not have to deal but still be that positive?
Great question. You want that one?
Sure.
Yeah.
I can share a personal experience from a 0% interest credit card myself as well. So I would say that's up to you and how your budget is going to allow for you to pay that off. If you have a payment that's due and it needs to be paid, definitely pay the minimum amount due. It's going to generate a minimum payment due every month. If you have the ability to pay it off and you wish to pay it off, that's great too. Every month when you don't have a balance on it and there's nothing that's truly owed, it's not going to make any bad mark on your credit. It'll still show that your payment was made on time, because every month can fluctuate. Now, when it comes to like a 0% interest, it's important to read your documents as well, because oftentimes if it says that it's a 0% introductory rate, come on that 12th month and then that very last day and it rolls over, if there's any balance that rolls over, you may owe all of the interest that would have accrued for the past 12 months. So I did that one time with a big company and bought a fancy TV and ended up paying twice as much for it. So definitely it's definitely hurts, but that's life. It's a roller coaster and you have to pay it off and move forward, right? And it's something that I can share, but it doesn't affect me in the way that it did back then. So if anybody is going through that, know that you can get through it. It's totally fine. Yes.
Question, relating to payment and then the closing of the account. So with payments, isn't it best to pay when your statement balance comes in? That way it like shows the history of the purchase and then that you paid it off on time and you also avoid interest. And the other question is what if you bought one of those store or you signed up for one of those store credit cards and then they close your account like 2 years and you haven't used it in the 2 years? Does that positive credit go away or does it gain your credit when versus closing it?
So for the first question, we're going to get to that. There is definitely, when you're showing your statement balance, that's something, there's a utilization rate that we want to be mindful of when you're doing that statement balance. And then absolutely, you are 100% correct. If you pay your statement balance off monthly, you do not have to pay interest. If you make the minimum payment due, then of course, whatever is rolling over would then start to accrue interest. And then for your second question, if you're having a credit card that's closed due to inactivity, depending on like how long you've had that credit established, because trade lines and how long you've had them open, that's another factor when it comes to determining your credit score. So let's say you've only had that credit card, you did that credit card for just that one purchase, and now it's being closed out after 2 years of inactivity. It's probably not going to sting as much as if you had that credit card for 15 years. And then in the past 2 years, you just haven't shopped at that store or used that credit card and now it's closed. So they typically will always send you notifications that that's something that's going to happen before that you close it, because the lender definitely wants you to stay with them and have them. And so that's just something to be mindful of, but that has to be whatever is working for you and your budget. And if that's something that's going to kind of be in the back of your mind and you're going to forget about it if you use it because you haven't used it in 2 years, maybe it's not a bad thing that it's closed out.
We literally just had this conversation this morning about her own personal credit card.
Oh yeah.
And her husband used it. And she's like, now I got to make sure I make that payment this month on one that they don't normally use. Right.
And I knew that I'm getting close to that time when it's like inactivity time and it's going to probably be closed. So I wasn't upset that he had accidentally pulled that out of my wallet to pay for the Big Mac at McDonald's. That wasn't a big deal. But I was like, oh my gosh, now you have to remind me, like I'm putting this on you because you pulled it out of there. You better remind me to make this payment.
Yeah.
Well,
yeah.
Oh, go ahead.
Go ahead.
Do you next.
Yep. So we're gonna get to that in just a couple minutes on usage. So yes, we'll get to that. One more question, then we're gonna move on. Yes.
Oh, it has to do with credit and usage.
Okay.
I've noticed that when my usage is like 80 or 90%,
Yep.
my credit drops. But I was told that not to pay the whole thing or pay less or usage less than 30%. Is that true?
Yep. So let's move on. I think there's some stuff we're going to touch on. So let's go ahead and move forward with that. And then we'll get to that part. So obtaining your credit report. How many of you are obtaining your credit report regularly? Excellent. Did you know that if you're not using it through like somebody who's watching your identity or anything like that, that you can go to annualcreditreport.com right now every single week and you can pull your credit report to make sure you know all the accounts that are open. There's no charge. They started this when COVID began and they're continuing it. So you can do it with all 3 bureaus. So annualcreditreport.com. Yeah. Similar to Credit Karma, just a different company. They're showing you the same thing. When you're going to pull a credit report through that, you will not see your credit score, but you'll see your credit report. So the accounts that are open, a great example of why you want to do this. When my husband and I went to buy our first home, we have his name's John Reed. There's a lot of John Reeds in the world, and a John Reed was on his account and it wasn't him. So instead of being able to just move through the process of buying a home quickly, he had to go back and deal with this account that wasn't his because he wasn't looking at his credit report. So it's really important to do that. Another thing that you can do, I know I do this for my family personally, and we'll talk a little bit about identity theft, is you can go through your financial institution or Credit Karma, different organizations that are out there, and have them monitor your credit at a minimal price each month to make sure that you know if new accounts have been opened in your name. So just this last weekend, I got an email from the company that we work with, and both my husband and I had the same email come through that said, nothing has changed on your credit report this month. That gives me just peace of mind. So I don't have to worry about if somebody's stolen our identity or not. At the same time, I know which accounts that we have open. So those are some of the benefits that you can do. So you can go online. It does not take long to run your credit reports, whether it's through annualcreditreport.com or Credit Karma, anywhere like that. You can also send in an application for this at the central source. That's the address there. You can do that, but I'm guessing that most of you would rather do it online because
I will say too, Credit Karma will allow you to track 2 of the 3 major bureaus. And so it doesn't include your Experian report. And so that's something to be mindful of as well. But if you're going to utilize that there are 3 bureaus.
Yep. And then if you want your credit score, it's typically $6 to $8 for every time you pull your credit score. You also might have a relationship with a financial institution that's pulling that for you every month or quarter. If you do, I'd highly recommend monitoring that. I know I do it every month when I go to look at my credit card payments that I have with one financial institution. There's my credit score, and if you're anything like the 2 of us, we compete with our husbands, and my husband's very lucky that his score is good because it used to be in the toilet. Honestly, but when you pay your bills on time and when you monitor your credit and you're responsible, your credit can go from 500 to 800. So we make it a competition at our house, and it's a lot of fun.
Thanks.
So if you get your credit report and you are looking at it and there's things that you don't see that are on there, what you can do to help yourself, you can file a dispute. So again, it's reaching out to the bureaus, talking to them. It's going out to the financial institution that you see an error has been reported and talking to them. At the same time, you can, what we were talking about earlier, you can do that consumer statement on your credit report and explain it so that if you're going out to look for credit and you see this error, you can explain what's going on so people are aware of it. You can do that with the creditor, the collection agency, and with the bureau. And then you also have the Consumer Financial Protection Bureau that can help you with it as well. When you would need to file it, whether there's an error, because we are financial institutions, we are not perfect. We do make mistakes. So definitely don't hesitate to, again, advocate for yourself. Identity theft, as we all know, is a huge thing right now. It's constantly going on. As financial institutions, we're always trying to stay 2 steps ahead of the bad guys, but that's not always possible. So really, we can't stress enough to each one of you to find ways to make sure you're monitoring your credit on a regular basis to protect yourselves. Whether people are getting a hold of your social security card and opening up an account in your name, or card, I meant your social security number, or they're somehow getting into, they're finding checks, they're finding access to your information. So make sure you're protecting yourself from that. You can place a freeze on your credit with all 3 of the bureaus, and Amber sees this as she's helping people. Do you want to touch on that at all?
Sure.
Yeah.
If you do decide to place a freeze on your credit report, just keep in mind that there could be a cost for freezing your credit report. And then when you're unfreezing your credit report, if you have it freezed, you may have to unfreeze it in order to have whatever lender do the credit pull for you, or give them a PIN, because they'll give you a PIN to allow that lender to do what we call a force request. And then we can move forward with actually reviewing your credit. So oftentimes if you don't have one, it may cause a little bit of a hiccup, but when we're pulling credit, we can utilize that same credit pull for a 30-day period, sometimes up to 45 days, depending on the product. Any questions for freezing your credit?
And then oh, yes. Mm-hmm.
But then that leads to at what point does a credit report generate the first time, and then is that even under 18?
Yeah, I don't know about the freezes for minors. Do you want to touch on that, or?
I'm sure that you could freeze for minors. However, if there's somebody that's obtaining credit in a minors, there should be a ton of red flags, right, as a lender. And so we're needing to verify date of birth, social security. And in that instance, you may be needing to supply either a birth certificate or a social security card. So then it turns into kind of a hiccup for these fraudsters to have to obtain and make. And yeah, some of them still do try to move forward, and like they'll even come in multiple times or submit the documents or whatever it may be. So that's definitely a question. I would like to know if you could freeze credit for a minor, because if the credit was obtained before the age of 18, I see that sometimes, but it's oftentimes for somebody that's an authorized user.
It actually happens.
Yeah.
Yeah. What I would say is going back to having monitoring a credit for your minor. Like I do that with my son, right? Like while I'm monitoring it, because I'm a little paranoid after just everything that happens and the amount of work that goes into protecting your identity. So whether you're going out and checking on annualcreditreport.com or you're working with a company that's running their credit for you so that you can at least receive that email that can give you that peace of mind and you can monitor it right away. So, yeah. And then with identity theft, you have the opportunity to file a report with the FTC and protect yourself that way. And you're going to want that when you're going to file a police report, because you need to report what's going on. So those are things you want to consider with identity theft. So with that, here comes the part that we were talking about with the credit score and how it's calculated.
So definitely when you're talking about how your credit scores calculated, you want to make sure that you understand what's on your credit report and making sure that all the reporting information is accurate. It's important because your credit is used to calculate your credit score, your credit report, the whole thing. And then how credit scores are calculated. It's actually a 3-digit number to reflect the credit risk and likelihood of repayment. And so a credit score, it's definitely something that lenders use. It's meant to reflect how risky it may be for a creditor to extend new credit to you. So the scores can range anywhere from 300 to 850, although it is possible to have a 0 credit score if you've never had any credit history at all. And then the lower the credit score, the higher risk an individual may appear to a creditor. So we say may because if you have a 0 credit score, you may not have any credit established. And then there may be different products that you're offered at a different kind of interest rate.
Another thing with credit scores, how many of you have ran your credit score through 2 different bureaus or 3 different bureaus and saw different scores, right? So the part of the reason is that because they have different algorithms that they're using to calculate that number. But at the same time, financial institutions, they don't all have to report to all of the bureaus. They can choose who they're going to report to. So that's why the number might be different. So they're likely pretty close in score. Again, I'm competitive, so I want the higher one, but that might not be the bureau that the institution I'm trying to get the loan with is looking at. So that's what you need. When you don't think it's anything bad with you and what you're doing with your credit, if they're different, it's due to the algorithm.
So FICO is the most widely used scoring model. It's another model the FICO is the Vantage score. So the FICO is going to pull a number for us, and it may be different from the Vantage score. The Vantage score is typically provided from like a free website, right? Like Credit Karma or whatever. And then it may be different, but it doesn't necessarily mean that one's wrong. It just means that they just may look a little bit different. And I don't typically see a huge jump in numbers when it comes to those. So I do have several people that want to borrow, and they're like, but this says it's higher. So that's why there's ranges, right? So if you look back on your page for a couple slides, there's different ranges that are in there. So there's actually credit score factors. So there's 5 factors that go into the calculation of your FICO credit score, which is the most common scoring model used by any creditor or lender. So the largest factor that impacts your credit score is payment history. So making every payment on time every month is one of the best things that you can do for your credit.
Even if it's the minimum payment, making it on time is crucial.
The second largest factor impacting your credit score is the amounts owed, which includes credit utilization. Creditors want to see loan balances decreasing, not hovering or increasing over time. So your credit utilization specifically looks at revolving credit accounts like credit cards, where your balance could go up 1 month and down the next. Credit utilization looks at how much of your credit limit you are using. The more credit limit you are using, the more risk you are to a creditor. If you have multiple credit cards, add up all your balances and then divide them by the total maximum limits, and that's your utilization rate. Ideally, you don't want to use more than 30% of your limits at any time, and even more ideally, pay your balances off in full monthly. So there's different, let's say you have $10,000 across the board. You want to make sure that you're using 30% or less, right? So $3,000 total when that statement balance cycles.
So, and that's something that you don't hear from financial institutions when you go in, whether you're applying for a credit card, they're not telling you that, right? So you might go and get a $10,000 credit card and you're trying to pay things off and you're going to use 8,000 of it at one time. That is going to bring your credit score down. It's showing that you are in need of that credit versus being able to pay it off. So it's showing how responsible you are. So making sure you stay under that's really important. Yes. Yes, you don't have to do it. It's recommended that you do it. So that's the difference, right? And I think that this is as a credit union, we try to be really straightforward. Amber and I talked about this morning. She makes sure that people understand when they come in. I'm recommending that you only use 30% of what we're giving you here with this credit card. And the reason is because it's going to pull your credit score down. Now, whether or not you do that, like life happens, we understand. And so maybe there's a point in time where you're driving and all of a sudden your car breaks down and you really need to use that $1,000 because now you have a bill of $750 to fix the car. And then you work to pay that off as soon as you can. Maybe it's not the first month, but if you can pay 3 months and then you pay it down and you're showing that you're responsible and you've brought that down to 30% or less, that's going to benefit you. Yes.
And you use 8,000 of that because you make whatever they purchase, you have the money in your debit card. So you spend $5,000 before the statement balance comes in. Will the credit report only show that you're still in that 30%?
You're going to pay it off in time as long as you pay that $5,000 off when the statement comes to, so, and you're not overusing it, right? Like you're paying it off right away. Your statement comes and it's in that time frame. You pay it off on the payment date, you're going to be fine.
So pay the $5,000 before the statement, and the $3,000 will show up still at 30%.
Right, because maybe you're going to use it for your credit card because you want the rewards that come with your credit card, right? So you want the 5,000. If you spend $5,000 on your credit card, and for every dollar you spend, you get 2 points that it's going to help you at a Marriott hotel or something like that, or air miles or whatever. Just pay it off. If you're paying it off, then you're going to be fine. Yep.
All right. Oh, you're good. Another factor is your length of your credit history. So we kind of, did you want? So adding on an additional balance onto the loan, or adding on and increasing the limit to the credit card.
the line or
Children.
Oh, yeah.
Yeah,
So
another
an authorized
authorized
user, that the primary holder, that wouldn't affect them, but that would start to affect the whoever is being added on as an authorized user. If they're going to be added on as a joint owner onto the credit card, then that may result in a whole new credit card because that one has already been established. So that's something to ask your lender when you're ready to cross that bridge, right? How would that work if I want to add somebody as an actual totally responsible party and have them be 50-50 with me, or if I'm going to have them be an authorized user because I want them to have this credit card in their pocket for emergencies or whatever it is. Some credit card lenders will only let you add authorized users. So that's definitely a question for that specific lender. Mhm. Yeah. So if the authorized user is actually spending on the credit card, that could affect the principal holder of the credit card, right? So putting an authorized user on your credit card, it needs to be somebody that you trust, and they need to also understand how the credit scoring and the factors that come into the credit scoring matter, especially if this is something that you're looking to do a home purchase in the next 6 months, but this other person that you're purchasing a home with needs to start to establish credit. Maybe we put them as an authorized user and let them know that they need to understand how it works as well, right?
Ultimately, at the end of the day, that person you're adding onto your credit card or your credit there, you want to make sure that they're not overexpending what you can pay back, right? Because it's your name, although it's gonna help them with their credit, it's gonna hurt them too if you can't pay your payment in full or if you're not paying it on time. So it's making sure that they're just as responsible as you are with your credit card. Yep. So it will build there. So my son's 16. I can add him to my credit cards right now and start building his credit as a 16-year-old. He can't get his own credit, but I can help him build that credit by having him on mine. He's just taking the risk of whether or not his mother's financially responsible, right? So, and that happens a lot, right? We're hearing about identity theft, going back to identity theft, children's identity who's being stolen by their parents. So it's crazy. So yes. Do student loans negatively affect your credit score? They will impact it because it's showing that you're using that credit. So whether or not you're paying it back. So right now, as student loans are coming back and people who haven't been paying their student loans for 3 years, right now, it's not being reported to the bureaus if they're making those payments on time, but in less than a year, that's going to start to be reported again. So people really need to take that into consideration and figure out how they put that back into their budget of making those payments on time. Yes.
If I close a credit card, will that decrease my average credit line?
So it's going to take, if you close that credit card, it goes back to taking away that history of what you had, right? So if you've done really good and maybe you were struggling for a little while and you're like, I'm no longer going to use that, but you paid off this credit card where you were struggling and you take that history away, that's going to be what impacts you. Yes. You don't want. Mm-hmm.
Or you also want to open up another credit card because the benefits will be better for your lifestyle.
Yeah, you can pick up the phone and call your lender and tell them, I do not want you to increase. We have it happen. People will call us. I don't want you to give me more. That's fine. So again, it comes to you advocating for yourself, and you as the consumer have that authority to do that.
So your length of your credit history, it looks at how long your credit accounts have been open. It includes the age of your oldest account and the age of your newest account, and then the average of all of your accounts. So the longer that you have credit history established, of course, the better. Another one is new credit. So that's where all those hard inquiries that we were discussing earlier are reflected in your credit score. So if you start applying for credit frequently, this can be a red flag to the creditors because they're going to start to wonder what's going on and why you suddenly need a new credit card, one a month, one or two a month, and then maybe a new loan next month, and now you're asking for another new credit card this month. So of course, we typically all need to apply for credit from time to time, which is totally understood. The key is to be strategic with when you do apply, and then limiting the hard inquiries to when you need it. Hard inquiries typically remain on your credit report for 2 years total.
I know we're almost at time. We could go on forever.
We
Not
really could.
Do you want us to keep going, Sally?
Yeah, we have to room, for another 10 minutes for sure.
Okay.
Okay.
Okay, sorry.
But if you do need to leave for class.
I think we've had lots of good questions though, so I think that's been good.
The final one is the credit mix. So that's the last factor that's going to impact your credit score. So the creditors want to see what you have a history of managing different forms of credit at the same time. For example, credit card, car loan, and student loan. This is one of the smallest factors impacting your score, but it can help to have a well-rounded mixture of types of credit when they're all managed responsibly.
So looking at this one, you want me to go with this one?
Oh, go for it. Yeah.
Okay, so this is a great example of that credit mixture, right? So we have Diego who has $1,000 limit and he's used 800, but Angela has a $10,000 limit and she's at 5,000 of what she's used of that limit. So what's that? No. So oops. So what we see is like Diego is using more. So she's in a better spot because she's only using 50% of what's been allocated to her. They're still above the 30 that we're trying to accomplish, right, as our goal. But that's the difference. Even though he has a smaller amount, he's overextended himself. So it's going, they both have, but he's using more of what's been allocated to him. So it's going to impact his credit score more. Yes. They're looking at the history of each individual loan. So the bureaus, they're going to have the listings of all the financial institutions you're working with. So if I have a credit card with Chase, if I have a mortgage with ABC company, they're going to look at all of those and see how often I'm making my payments on time and at least making the minimum, or if not making more. So, okay. So how to build credit. So start reviewing your financial situation and your goals. So whether looking at where you're at, looking at how much you can afford, that question about if they increase your credit, if you're not comfortable with that, make sure you make an adjustment to that. Call those institutions and change those. Make sure as a family you understand, or yourself, even like in this country, we're horrible. We do not talk about credit with each other. We do not talk about money. It's taboo, right? We kind of need to make a change. Don't be embarrassed. Have these conversations, because if you're not talking as a family or explaining to your friends what you're trying to accomplish together, then it's going to hurt you. Like, don't be embarrassed. We need to have these conversations to help each other. So building credit through credit cards. So whether it's just a standard credit card with a bank or a credit union, or building it, if you need to start out with a gas card from a gas station, you can start doing it that way.
Secured credit cards. So secured credit cards are for somebody maybe that's repairing or building their credit, that we couldn't lend money to without having some kind of collateral. So oftentimes a secured credit card, the minimums are $300, $500. So then they would put that money, they would hold that money and then give you a credit card with that credit limit. So then you would have the ability to spend on a Visa or a MasterCard or American Express. Did you have a question? Okay. I'm lost. Oh, and then secured loans. Secured loans are, they don't come with a tangible credit card, but a secured loan can also help somebody to establish or build credit. Or maybe sometimes you have the money in savings and you've saved for this bicycle that you wanted to get, and it's $1,000 bicycle. And so now you have the money, but you want to help to build the credit with the money that you have. You don't need to get a loan for it. You can borrow your own money to buy that bike. So now you can do a secured credit or a secured credit loan. So we're going to hold that $1,000 and then give you the $1,000 back. So now you have a monthly obligation to pay, and then you can take the $1,000 and go purchase whatever it is that you want to purchase. And then another one is cosigner. So you may be asked for a cosigner, and then or a joint owner for loan or a credit card. It's important to know that both parties are legally and equally liable for the debt on a joint account. So if you do end up going this route, there is risk involved that's important to weigh, and then have a clear agreement in place for and with that individual. So if you're asked to supply a cosigner or have somebody cosign with you, then definitely make sure that it's somebody that you trust.
Is anybody a cosigner on a loan here, or have a parent that's a cosigner? My husband gets mad because I used him as an example all the time from when he was younger, but he had an auto loan with his parents, right? And he was responsible for making those payments. And one day the lender called his mom and said, John hasn't made his payment. And that doesn't go over well, but like, that's what it helps to build your credit and have them there to help if needed. So, and then we've talked about authorized signers today, and how you can add people to your credit cards or to loans so that they can help sign on those. So common myths, we've talked about this today. Closing a credit card will hurt my credit score. Yes or no? Yes, it will hurt your credit score. Yes, because why would it hurt it? Erasing the history. So we kind of talked on it a little bit with Amber's situation, a great example. Like if you have a credit card, whether it's with whatever financial institution, if you use it once a year, maybe you're setting it up, you have 2 or 3 credit cards and you're only going to use one of them once a year. Maybe you use it to pay utilities, things like that. It's building your credit. It's showing that you're responsible as long as you're making those payments on time. So those are things that can help you and show that history of responsibility, which is really what we want you to take away today. Building your credit and showing that responsibility of how you've managed your money is huge. Yes.
I don't have a bad history with any credit card, but if you did have a bad history with a certain credit company, if you close the card, wouldn't it technically get rid of that bad history as well?
We can still see closed accounts on the credit bureau for a period of time. And so if it's closed off and it's paid, excellent. That's not going to truly affect you in a super negative way, but it's still available to see, but it's not something that's used heavily in determining your eligibility for the card at hand. That's going to be determined by the open credit. I do this because I'm looking at a credit report in my head and I can see open reports, closed reports, and then any derogatory reports.
So if it was you had a bad time with this one credit card company and you paid it off, wouldn't it be best to close it, or would it not matter at that point whether it's closed or open, paid off?
So depending on the length of time when you were not able to make that payment, it could be reporting and show that it was, so they'll show current now, but was 30 days past due or was 60 days past due. And so I'm sorry, your question again? I just got lost in my credit report in my brain.
So if you did pay off the credit card that you did have bad history with, would it be best to just shut it down? Would it not make a difference? Would it just be kind of preference at that point? Because if it's a good account, you wouldn't want to close it necessarily, right?
Right.
But if it's a bad account, does it matter to people?
But if you just paid it off and you showed that history, it's now increased your credit score, right? And it's showing that that's improved. So I would say you leave it open, because now you've shown credit worthiness, I guess you could say, and showing that I'm responsible. Maybe I was going through bad times. Again, this is where you could have your consumer statement that could say something about that, right? That says, hey, I was going through a tough time. Maybe I was laid off for a few months and I ran into some financial issues, but I'm back on my feet and I've got this figured out. And I'm, does that make sense? And when you go in, if you're going to go and open a credit card and have a conversation with somebody like Amber at a financial institution, tell them your story, especially at a credit union. I can't speak for all financial institutions, but tell them your story, because that's where we're different and we want to help people. We really want to understand what's going on, and we will go advocate for you, our members, by trying to make sure you're connected with the tools that are going to benefit you. So Okay, so checking my credit will hurt my credit score. So checking your credit, no, because you're not pulling your credit, right? So you're just looking at that report. So you can look at that every month, every week, right? With the annual credit report, you can look with Credit Karma, whoever it is, every month or every week, and it will not hurt you. And when you're going in to open a checking or savings account, it's not going to hurt you if they're looking at your credit. They're just looking at your credit, not your score. And then tips for using credit wisely. Keep money in savings, right? Help yourself. When we were just talking earlier, we went and worked with 12, 13, 14-year-old kids yesterday, talking to them that you're a bill. Pay yourself first. Put money into savings to prepare you for when you run into those days where maybe your car breaks down and you need to make a payment on your credit card and you don't overextend yourself. If you have money in savings, help yourself in preparing for those times. Consider using a credit card for only one charge a month. So if you're setting it up for utilities and you're showing that you're making those payments regularly on time, keep your balances at less than 30%, right? That's on all your credit cards. If you need to look at everything and create a spreadsheet or use the tools that you have at your financial institution to look at all your credit cards, they have those. Use those to benefit you and make sure you're not. Look at your statements regularly. Again, I use personal experiences. I know if my husband got his haircut today and he's going to be like, yeah, always look at the account. There's no surprises. I need to know where our money's going and how we're using it. It's how we're responsible with it. And so looking at those things, whether it's checking, savings accounts, or credit card charges, look at those regularly.
How hard is it to buy gifts for each other?
Yeah, it's a problem at my house. I say that I don't look in December.
Same, but I do sometimes on accident because it's
I'm-
habit.
I might have found out about a surprise birthday party through a credit card charge. So, but make your, at the end of the day, try to make your monthly payments on time and in full regularly is what we would tell you. So, hopefully this has been helpful. I know you all had a lot of questions and we talked a long time and went over time, but hopefully you found it beneficial. And if there's anything we can ever do, feel free to shoot us an email. We're here to help. We're right down the street. So thank you. Yes. Yes.
Ooh, it's called Experian Boost. So you're going to utilize the Experian Boost. I can't speak to what it is for Equifax and TransUnion, but it's, I'm sure it's something that's similar. I don't know if it's called TransUnion Boost or whatever, so. So it's not necessarily the payments that you're using because you're using your credit card to swipe or make those payments. It's it's an additional credit line that would show on your credit report. So you would see your credit card, any kind of other loan that you have, and then you would see telecommunications for your cell phone, or you would see utility, PSE, whatever it is. Yep.
What's your guys' favorite credit unions other than the one that you want?
Other than sound. Her question was, what's our favorite credit union?
I love all credit unions equally because credit unions are for the people, but I definitely have a couple credit union accounts. So there are some major ones here in Washington State. And so, yeah, definitely. And if you're looking, if it's specific that you want to find whatever the best interest rate is for you. Yep. So it's very competitive market out there. So it's something that can change monthly. So I would definitely look at that, and then keeping your credit score up, that'll help you obtain the best interest rate as well.
Yeah, shop around and get to know those that you're going to work with. So if you're looking at their website, because you don't want to go into a branch or anything like that, make sure you're finding one that you find, a credit union, financial institution that you find that's reputable and that fits your needs.
Right.
That's really important, making sure that they fit your needs.